benefits me. Don't forget to like, share, comment, and subscribe. Investing.com moves in oil, whereas reflecting as thoughts on the Ukraine front this week, given that Vladimir Putin has turned global energy prices into a referendum on his war. Perhaps it should not be surprising yet is what, after nearly 7 months into the invasion of Ukraine, the fortunes of both oil bulls and the Russian president's special military operation did not appear that special after all. Crude prices had flat to slightly higher on Friday, but on a weekly basis, they fell a third straight week, with U.S. crude West Texas intermediates finishing again beneath the $90 per barrel mark, while global benchmark Brent struggled faintly to recapture the $100 break in loss on August 31. More interestingly was what was happening with the Russian president and his one-time stranglehold on energy prices. There was a time when Putin made hint of a squeeze in Russian energy export would have made oil traders hit upright and sent crude prices flying. Lately, however, some of Putin's rhetoric seems to have lost its impact with the energy crowd. This included his threat to completely shut down all oil and gas flowing out of his country unless the G7 has its so-called price cap on Russian oil, and the EU dismantles sanctions will around the Nord Stream 2 pipeline. Let's be clear about sometimes the energy market in general is still super tight on supply. One major description is all it might take for prices to come screaming back. Yet oil prices haven't not really gotten too much higher from the 7 months low they plummeted nearly 2 weeks ago, and that's because of the overtime work the Federal Reserve has been doing in scaring the businesses out of traders over inflation in interest rates. Oil bears have also had a helping and from a lockdown-friendly China. The Sims COVID time trapped in Marty MC flies fictional MC Lauren, when the rest of the world has moved on with the pandemic for more than a year now. European gas prices are still sky high, of course, and US gas prices are aspiring for new 14-year hikes. They in sympathy with what's going on the other side of the Atlantic. This is in spite of a very well-informed constituency of the gas markets patently telling Onion, who cares to listen, that the US LNG output is capped at 13 billion cubic feet per day, and there's nothing more we can do about raising that right away. Even if Europe goes to hell in a handbasket this winter, which incidentally is what Putin wants, that is get there in a frozen flat case. Anyway, much of the lofty prediction for crude and gas prices in the fourth quarter of this year and the first quarter of 2023 are based on forecasts that the forthcoming winter will be brutal. No one knows for sure how that will turn out. If the opposite turns out, I can only imagine how much money is going to be lost on the long side by those listening to the wonderful advice of Jeff Curry at Goldman Sachs. But back to Putin. More interesting than the moves in oil was the public dressing down the Russian leader got on Friday from one of his greatest allies, Indian Prime Minister Narendra. Okay, maybe that's all from me. Thanks for watching. Don't forget to like, share, comment, and subscribe.